Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 7th day of August 2015, and this is the daily report for gold and silver, our weekend review. And what a way to end the week. It's almost a non-event. We did have numbers come out. The jobs report did hit 215,000 new jobs added in July. On top of that, upwardly revised figures for the 2 months previous to that. And we, in essence, saw gold pop up a little bit on that. Really no negative moves on the market. And looks like it's going to close, in essence, unchanged. Currently, 1091.50, up $1.40. That's where COMEX closed. You do have the spot market. That is still trading, and that's around 1092. We have seen the markets trade to a high of 1099, so it's not been able to pop over 11, a low of 1083. So we've seen a range in the market, an extended range, but even with that extended range, you're looking at under a $20 range on the day. So quite interesting. If we look at the big picture, can we say that much of the anticipation of a potential rate hike in September, which I believe is more likely than not given the data we got today? In fact, I was just listening to some statistics, and one of the statistics I found most interesting is if you look at the cumulative effect of new jobs created since the beginning of this correction, or call it recession, so to speak, you have added about 11 million new jobs to the marketplace, a greater expansion than any other recession period that we've ever seen. So when you look at that cumulative effect, and rather than focusing on we had 200,000 added this month, or 250 added this month, or 190 added, if you look at the cumulative effect, there's absolutely no doubt that we are on track. The economy is improving, and by all means, we should end this zero interest rates and start spiking it back up 25 basis points, 0.25% at a time, which is, I believe, how they'll do it. It's not going to be a dramatic increase, but rather a gradual increase from where the market's sitting at, which is roughly at a 0% interest rate, to whatever rate it ends up at, whether that's 2 or 3% over the next few years. So traders, what sense can we make of the recent data which has come out? And more importantly, what sense can we make of the most recent market activity that we have seen? Now, we're looking at a daily chart. This is a spot chart of gold, standard candlestick format. We absolutely see, without a shadow of a doubt, the fact that we are still in this absolutely defined trading range. That trading range is still defined by a upper level of resistance at 1,100 per ounce. When we take a look at today's highs, you can see that we touched at that particular price point without the ability to trade above it, close above it. So we've gotten a high that is higher than we've seen in 1, 2, 3, 4, 5 trading days. So the last week, this would be Friday of last week, we also had the market kind of spike up. That was followed by Monday, this Monday, in which we had the market spike fairly hard to the downside, but then again, still remaining in the trading range. The next thing that we can say when we look at the most recent activity is support has been defined at around 1180. Now, the low didn't quite get there. The one thing that we have seen is that we had a much more highly defined range today than we have had on any other day during the week. Even if we consider Monday here, it is a lower high on Monday than the high that we got today, and certainly a higher low. So inside the trading range of Friday's activity. However, when we look at our net change, you once again have a very, very small bodied candle, almost doji-like on the day. Now, if you look at that, you really can't glean too much information. Now, we did see an engulfing bullish yesterday, even though it's ever so slight, because it doesn't take much when you have these real small bodied candles to get that. For example, even the prior day before that, this being Friday here, Thursday here, Wednesday here, when you look at Tuesday's candle, it is slightly higher on the day. It's a hollow body when I put the green over that so we can go to black and white, so to speak. But that is engulfed by the following day. However, you don't get any kind of confirmation, and what we're really looking for more than anything else is whether or not this market breaks to the downside, and a break to the downside would be an effective close below 1080, or if we see it break to the upside. Now, a break to the upside would be an effective close above 1100. And to me, it is that close that is most important, because we have seen the market absolutely trade above 1100 in terms of a price point, in terms of a high wick in the market. But for the last 2.5 weeks, we have not seen it be able to close above 1100. Now, the same can be said for the support level. We've seen the market, although on less frequent occurrences, test these lows down here, and you got that about, 2 weeks ago, but it really recovered and actually closed at the upper level part of the range. So we're not able to glean, on a technical basis at least, a tremendous amount of information. We can make a case for this market selling off, consolidating, and then breaking back to the prevalent direction of the market. However, another technical case can be made for the market selling off, hitting these predicted lows. We called for 1080 as a low. We called for that a couple of months ago. We hit those lows. Does that mean that we've actually bottomed out in this area and are going to start back up? And quite honestly, I have to tell you that I am torn between those two assumptions, or I should say market models, because without it closing above that resistance level or closing below that support level, simply put, I don't have the technical information necessary to make a calculated assumption about the market. The only assumption that I can currently make is that it is caught within a range. It's hit the lows that we called for. Will it make new lows? Until we see a trade and close below the points that we talked about, meaning 1080 in gold, and close above 1100, quite honestly, we are sitting in a sideways market that is waiting to break out. But I can tell you, we're sitting with a position at 1082. We have our stops. The stops have held, but then anything that was, 1106, 1107, 1110 is really that resistance area that I believe if broken, you will see a lot of short covering, and that would in fact push the market up, because you have a predominant amount of shorts in the market in terms of speculative money right now, and we know that commercials definitely like to work with speculative money and kind of back them into a corner where they do have to cover positions against them, meaning that are not in profits but are actually they're protecting equity in the market. So that being said, we're going to go into the weekend with our open short position, but I want to be very, very sensitive to what we've just talked about, and that is the fact that if we get some sort of an effective close above 1100, we could in fact see a squeeze play come into the market, knock the shorts out, and that would probably push the market up to 1020, 1030 in that area. Certainly we don't have any real resistance in the market till just above 1140, not 1040. I get confused as we break through these century marks. On the other hand, if we see the market move down, we'll have to look at some other charts to calculate where it's going to go, as we have over the week. In fact, let's go ahead and bring up our weekly chart. And traders, I've done just that. I've also added to this weekly chart a couple of areas that we really want to look at. The first area is that upside resistance area in comparison to historical data before the market moved. And the reason we have to use historical data is, of course, once it broke below that 61% retracement, we have not seen these price points since 2010, 2011. But on the upside, you can see this top here, which matches to this bottom here. It is an important number, and I believe that it is around 1165. So that's your really upper level resistance area long term. Now, support area long term has got to be this particular bottom here, and this particular bottom here comes in at around $1,000 per ounce. So we've got $1,000 per ounce, which is very, very long-term support and very, very long-term resistance coming in at around 1165. And yes, it is a $165 range, but we're also looking at a historical perspective on this market that goes back some to 2010, meaning some 5+ years of historical data actually to get these numbers. So based upon that, that's got to be the different areas we're looking at. Quite honestly, I'm surprised that with such a positive jobs report, we didn't see any kind of negativity or selling entering into the market. That's actually fairly bullish when you consider that the jobs report numbers came in online. They didn't come in well under or over expectation. But what that tells me more than anything else is that this rate hike, the potential for a rate hike in September, has absolutely been baked into the current price of precious metals, meaning they're already accounting for that, and it would be a deviation from what our current assumption is that would necessitate a big price move in our markets. So traders, what about silver? Well, actually silver is starting to look a little bit more bullish, especially than gold. Could we see this market continue down? Yes. What can we say about the most recent activity in silver? Well, when you look at the action over the last few days, we definitely saw this market which traded below 1450. That was the area that I looked at as critical support, now trading well above it at about 1482. So we've seen the market come up genuinely about 40 cents, which is a sizable move in silver. You had a really stronger move today on today's move, but we're still moving up in the teens, moving up 10 to 12 cents at a time. When you consider that this market can have a dynamic range of a whole lot more than that, of course, I think back to the $4 range in November, December of last year, Thanksgiving weekend. But if you take a look at some of these spikes that you'll see in silver, when silver wants to move, you're going to see a pretty dramatic rise. You can see that on these occasions that I've kind of highlighted in my chart. But at the same time, we absolutely see resistance at 15. That was the high today. So we have resistance that has come into the market, but on the positive side of silver, we have seen it come back up over 1450, and now I believe 1450 is support rather than resistance. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update review. Bye-bye.